He holds the record for the largest payout in prop firm history. No one's managed to break it yet. So
trading is just a repetitive game. Like, you're just trying to show up and perform to the best of your ability. And that's really all you can do. Right now, I'm kind of at a low point. After September had an amazing month in my personal account. But after that, I kind of go through a buzzsaw period. I've already had a massive year, a record year. So I do feel like I'm still carrying a little bit of burnout from that because I was so hyper-focused for 3, 4, 5 months that I just don't really feel like the same person when I sit in front of the charts. I think as far as risk capital, when you're trading prop, I think the pressures aren't as heavy as trading personal, because if you have a red day, it's not coming out of your bank account. It's not coming out of your brokerage account.
It's the one and only, you already know who it is, JadeCap.
Trading really should honestly be somewhat effortless. You're showing up, you're following the same processes every single day. When you feel really confident about a specific setup is usually when you get rolled over. I never try to adjust my strategy based on what the market's doing. I typically will always have the same strategy, whether we're in a range-bound market or whether we're trending. And that's really just waiting for liquidity raids. Maybe you didn't hit your goals this year. Maybe you're still a break-even trader, but you should be looking forward to next year.
What would you suggest people need to do?
You have to have peripheral vision for all these different aspects of trading that nobody really talks about. I think they know about it, but the problem is,
welcome back, everyone, to the Alpha YouTube channel. We're back for another Alpha Prime podcast. And this trader, we love sitting down with him, especially myself. Like every once or twice a year, we get an update of where he's got to, the highs, the lows, the realities. One of the most transparent traders out there when it comes to expressing the highs, lows, and the journey of trading. He holds the record for the largest payout in prop firm history. No one's managed to break it yet, surprisingly. I thought that's normally how it goes, right? But I think you might hold that record for some time. But it's the one and only, you already know who it is, JadeCap.
Brez, what's going on, man?
It's a pleasure, man. And I was just saying how, that's all I was thinking about before we came today. It's like, actually, me and Kyle kind of sit down once or twice a year, every year since the podcast really started. And we get to see that progression and sort of updates. And well, the last time we sat down was actually in this very, the studio next door, but in this very studio, and we had a roundtable, and it was shortly after your massive payout in the futures firm and on that side of the industry. Give us a kind of a recap or how things have been going since then. Any notable things stand out to you?
No, honestly, more of the same. I think the more and more I sit down with you probably recognize like trading is just a repetitive game. Like, you're just trying to show up and perform to the best of your ability. And that's really all you can do. So you go through periods of highs, you go through periods of lows. Right now, I'm kind of at a low point. After September had an amazing month in my personal account. But after that, I kind of go through a buzzsaw period, which I'm always trying to avoid them. Obviously, every trader wants to avoid the periods where they're going to struggle with performance, but not too many people can. There's no rhyme or reason of when you're going to go into a performance dip. Sometimes you're doing everything right and you're still losing trades. Sometimes you're doing everything wrong and you're losing trades, or maybe even winning, but that's not what is going to be sustainable long term. So whenever I go through those periods of ups and downs, like whenever I'm in a drawdown period, whenever I'm struggling, I just try and take a breath, right? Take a step back, recognize like I'm blessed where I am, and I still go on massive runs here and there. And I just know, like, if I keep showing up and I keep putting in the work in and continue protecting the downside, that at some point my trading is going to turn a corner and hopefully have another massive run.
Talk to us about that for a minute. So, after all this time, these real big highs, as you say, you have these lows as well. In these low moments, what are the thoughts that go through your head at this time? Is it the same as when, as it's always been, or does it change over time as you start to have higher highs, start hitting more consistency, more payouts, more profitability?
Yeah. I think that's the interesting thing with trading is that every time you hit a new high, right, the low is usually, it still feels really terrible, but you're hoping that it's going to be a higher low, right? So you're looking at your trading trajectory, your career trajectory, and the peaks and troughs that you have to go through. Yes, it feels just as bad as it did when I was managing less money and taking and suffering those losses. So it's important to have that reset period. Like next week, I'm probably not going to trade at all. This week, my execution was so off. Like, even though I was taking trades that were in my system, I was mismanaging them, scaling them too much, adjusting the stops too much. And it's just not typically how I trade. But when I go through those periods, I just have to take a break because it's very hard for me to say, I'm going to get back on track the next day or the next week, because it takes some time to break that rust off and to get out of that period of making mistakes, right?
What does that reflection look like for you then, in terms of you have a week like this week? Are you reviewing the trades that you're taking? Like, and what does that look like in terms of, are you reviewing individually or just overall as a week?
Usually I just review overall as a week, and then usually I review overall as a day, because usually when I'm making a lot of mistakes, it's a lot to journal and it's a lot to dissect. And there's some trades that you take that there's just no rhyme or reason on why it didn't work for you. A lot of times, you're trying to spend way too much time in the past and, nitpick and analyze, what did I do wrong? A lot of people ask me, they send me charts and they send me their trades and they say, what did I do wrong on this trade? A lot of times when I look at that trade, they might not have done anything wrong. And they're trying to find a reason for them losing rather than just accepting the fact that trading is all about having a plan and a process, showing up, following those rules, regardless of whatever the outcome is, right? So again, when I have those really rough periods, I just have to say, okay, the market's going to be there next week. Like, just for the fact that the market is extremely volatile during periods does not mean I have to go into the markets tomorrow. And I shared a tweet the other day on no trade days. Somebody posted it. I don't know who the gentleman was, but he listed all the benefits of having no trade days, right? It builds discipline. It builds patience. It builds all these characteristics that the average retail trader just doesn't have.
Do you find that trying to stick to no trade days or accepting them is harder when you're going through those lower moments and sort of having those poor performances?
Yeah, of course, because you're carrying scar tissue with you from the previous trades. So I think a lot of traders that are constantly thinking about the P&L that they're trying to make back, right? All of a sudden, subconsciously, whether you think about it or not, you're going to make mistakes or you're going to be on edge when it comes time to actually execute at a high level. So, professional athletes, they're not really thinking about the last play that happened, right? Especially the top performing ones. They're just focused on what's in front of them. And that's the most important when you sit down in front of the charts. And a lot of times, traders don't have that vision to be able to just say, no, I'm not going to sit at the desk today, because they find themselves sitting at the desk, seeing something in the charts that's telling them they should put risk on. And then all of a sudden they're getting rolled over. And then they get frustrated. They start revenge trading, over trading. All those bad habits are because, right, you're not following a system and a process.
One interesting thing we've had this year is obviously Trump come back in as president. The markets have had numerous different cycles, if you will, elements of volatility and then drying up of volatility. Like, how have you had to adapt your trading throughout these different conditions we're seeing? We're probably looking at, even today as we sit here, Trump just announced tariff talk with China. The market's aggressively sold off after being all-time high for week on week on week. So we're probably looking at potentially another month or 2 months or 3 months of maybe volatility and those sort of headlines making impact. But like, how does that impact your trading? Like, what are the things that you're then adjusting or not adjusting, stepping away or stepping in? Like, how does that, depending on conditions and narratives, how does that change your trading in your day-to-day?
Well, earlier this year, I feel like the trades were easier to spot for me, right? The markets were moving around. They were actually respecting the levels that I expected them to respect. But now, the past couple months, I would say, it's kind of been shopping in a range. There's some outsized days here and there, but for the most part, it's kind of been an intraday trader's, paradise. Whereas I can't predict what the market's going to do in the future. Do we continue going through a period of ranging, or do we, kind of open up and volatility starts entering the market? The only thing you can do is to stick to the same process, because what happens is, maybe you adapt to a specific trading style. All right, we're trading in a range. Now, all of a sudden, we go into a super volatile period, and now you don't know how to swing trade anymore, right? So I never try to adjust my strategy based on what the market's doing. I typically will always have the same strategy, whether we're in a range-bound market or whether we're trending. And that's really just waiting for liquidity raids, waiting for some momentum to push in the direction that I'm expecting, and try and position myself properly inside of that daily candle. And if I can't do that daily, like on a consistent basis, then I really have no business trading, to be honest.
Do you think that that's a problem that a lot of traders have, actually, is that because of the changes in volatility and certain narratives and movements in the markets, rather than focusing on the risk management, following their process, and, as you say, just sticking to your process and what's worked throughout that period, they will look to make tweaks or changes, change strategy, which then results in them, as you say, like they might start getting results for that condition. The condition changes again, and then they kind of find themselves in that revolving door of just constant changes and changes, which then leads them not to having profitability. While though it's still painful sticking to what you're doing, because then during a flat period, whether let's say you've got a strategy that's more, trending and following that volatility, you're then finding yourself in this chop. And the reality of that might be you get into trades, it goes X amount in profit, but then turns around on you. Is the hard bit really just getting used to during that motion, just accepting the fact that those are still valid
you
trades?
just have to endure it. And actually, before I drove down here, I was listening to Chat with Traders, this one podcast, like Best of Risk Management. I think Dan Shapiro talks very highly of this situation where every trader at some point is going to go through a buzzsaw. So no matter what you're doing, you could be following all your rules. You're going to go through a period where nothing you do works. And that's essentially trading in a nutshell. When you show up to the charts and you consistently perform and have the same routines over and over and over again, at some point it's just a matter of time until that market condition goes back in your favor. There are ways to try and filter it out and identify when that's going to happen. Like if I am 50-50 when I sit down in front of the charts on that specific day, I'm best off not trading, which is a very hard thing for most traders to do, because I think social media and everything that you see about trading, it makes it seem like all the professional traders are trading all the time, and that's just honestly not the case. They're trying to pick and choose their spots very carefully where they can manage risk and they put size on without having, too wide of a stop loss. And really then they're just following their process once they're in the trade.
What's it like been for you transitioning then? So you started off CFD space, did extremely, extremely well for numerous years there. Changes happen in the CFD space, transition to futures, pick that up, ended up doing the record payout. From there, though, you've started to trade. You still trade prop perps, but heavy focus on personal capital. You have the Alpha Prime as well, which is personal capital. But I say personal capital, it's live capital, sorry. But what are the key differences you've noticed making that transition, starting to put a focus onto live capital, your personal account? Like, have there been any things that were kind of surprising to you? Things that, you wish you kind of had some guidance on or just knew about beforehand that maybe people could look to learn from in the future?
I think as far as risk capital, when you're trading prop, I think the pressures aren't as heavy as trading personal, because if you have a red day, it's not coming out of your bank account. It's not coming out of your brokerage account. But when you're trading personal and, just let's say it's a percentage of your liquidity. I don't know how much money people have out there. Obviously, assuming that the average person that's trading, the average retailer, might only have $5,000-$10,000 to trade with. But let's say if you scale up your accounts, maybe you're using prop to fund your personal accounts. When you go into the live environment in a personal account, you do have to worry about liquidity issues. You do have to worry about the size that you're putting on, because if you take a stop loss, you're taking that full stop. So if you get to a point where, let's say, you're worth six figures, multiple six figures, and you were comfortable trading, $1,000 in a prop account. Well, now you have to be comfortable trading $1,000 in your personal account. So if you take a loss on the day, there's no reset on that. With a prop account, you could risk, $10K, $20K in a day, but essentially only lose $1,000. So the mental aspect of it is much heavier. Like, it carries a lot of burden with it. And I think when you're trading a personal account, you have to be mindful of, am I going through a burnout stage where, I'm just taking too much risk, I'm getting, steamrolled, going through a buzzsaw period, or am I, getting too high, elated over the wins? And that is a very difficult thing to do. But I think once you get comfortable with the amount of liquidity that you have and the amount of percentage that you're trying to risk as far as a per trade basis, now, it's a far cry what I'm risking now from when I first started, or even 10 years ago. It's not even close. Like, it's a almost 50x, 100x multiple of what I used to risk. And the challenges that come along with that, it's just, you have more money in your bank account. You have, some lever of safety net that you can, I guess, not so worry so much about taking a loss. But as you grow and as you scale, right, the dollar amounts, they keep getting higher. If you're trying to be a professional trader that's trying to scale up their risk and their capital along the way, all those challenges keep coming back. So when you go from $50 to $100 risk, you feel that difference. You feel it emotionally. When you go from $50 to $100, when you go from $100 to $1,000, the same challenges of trading pop back up. It's like, how do I manage my emotions around this new level of risk that I typically was not comfortable with before?
What about the lack of rules, if you will, in terms of the complete freedom to trade however you like? Has that been a net positive, negative, certain things that may have surprised you, going into that environment?
Yeah, I think the prop accounts can be used as an educational tool because in a personal account, there's no rules. They give you a lot of the intraday margin, so you can risk way more than you typically would. And they don't have contract size limits. Like if you have the margin, you can put the size on. So treating prop accounts as if it's an educational tool is very important. If you can take that same framework into a personal account, it's going to take you a long way because, again, there are no rules and there's no guidelines for a personal account. You can make 25% in a day if you wanted to. You can also lose 25% in a day if you wanted to. You could do the same with a prop account, but you have to go through the process of, taking your credit card out, paying for another challenge. It gives you some time to process of what's actually going on. Rather than you taking a loss, you still have the money in your account. You could just click buy or sell right away.
And it's the reality of also, as you said earlier, the difference in the risk. The risk is 100% real. It's going to really affect your bottom line. There's no reset. And I think it's easy to sort of take the mindset and habits potentially that you're used to in the prop environment, take it to a live environment, and then unfortunately probably burn yourself in the process. But a lot of the time, that's how people learn, right? But in terms of Alpha Prime, though, so you were one of the first traders who moved across to Alpha Prime. What's that journey been like for you? I know obviously at the time it was probably ill-timed for where you were at after doing that record payout and being used to such larger capital sizes and being in that prop firm environment, that simulated environment, and at the same time transitioning to live. What was the reality for you?
It's honestly more of the same, but I will say that this year has been kind of a bit of a roller coaster, not as far as my trading process, but I just know that I was able to capitalize on a lot of volatility earlier this year. And now I'm not so much concerned with catching the large move into the end of the year. I've already had a massive year, a record year. So I do feel like I'm still carrying a little bit of burnout from that because I was so hyper-focused for 3, 4, 5 months that I just don't really feel like the same person when I sit in front of the charts. It's like some days it's like a drag to sit in front of the markets and want to put risk on. And I think any trader that hits those levels, I don't know how Umar Ashraf, can comprehend with this, but he probably has a very similar thing where, he'll go on a massive run. I think when we sat down for the roundtable, he says he goes through periods where he doesn't even want to look at trades, right? He doesn't want to look at the markets for a whole month. And I think it's just normal to be at that level where if you have the risk capital, you're only trying to find the prime opportunities, no pun intended, to be able to take advantage of them.
Yeah.
But if the prime opportunity for this year, let's say, has already occurred in the first 2 quarters, the index market is, I think NASDAQ is probably up 18%, or maybe the S&P is up 18% this year. This is already an outsized return for the index. So you trying to over leverage at the highs, maybe not the best idea, but also you don't want to be the first person to try and short the market because it's just been going higher, right?
To that point, how important is it to really look at those outside factors, as you mentioned, where we're already positioned within the market, how the market's already moved? Like, how important is it to actually take on that rather than just, here's a chart, let me trade that chart? As you talked about earlier, the importance of no trade days.
Yeah.
Right. But how important is it to understand the outside influences, the outside sort of standing of where the market's actually at overall, like taking that bigger picture view?
It's hard. So you should try and do your best to gauge the sentiment of the market. Is the market frothy or is it underbought? Is it undervalued? Those are things that are analyzed from a discretionary standpoint. Like nobody has the right answer. As much as you can use AI tools and ChatGPT to try and determine, where is the market likely to go next? Nobody really knows, to be honest. It's more of like a 50-50 shot. And when you feel really confident about a specific setup is usually when you get rolled over. And I was having this discussion with the person that's helping manage me at the Chicago firm, and he mentioned that a lot of the top traders, their best trades are usually when they're only grading it like a 6 or a 7. So their confidence level is not at like a 10.
Mm-hmm.
And usually when your confidence level gets way too high, that's extreme fear, extreme greed, then you take a massive loss. So if you can always think about the opposite side of your trade occurring. So if I put a long on, what should I be doing if this market is going to go against me? Or what are the odds of it going against me? Because those odds are always there, right? They're always present in the market. And that's just the reality of putting risk on.
In terms of the Alpha Prime journey, then, I know you started at a certain amount. You had a really good run recently. Like, what does that look like, in terms of the vision and where does it find place within your overall trading?
To be honest, like as I used to trade with all my other accounts between personal and prop, I try not to think about that as an outside factor, right? So I'm trading multiple accounts. They're all different sizes. I try not to look at it so much as, I have to do this in this account because it's a live account, or I have to do this over at Chicago because it's a major opportunity over here. I have to do this in my personal account because whatever's going on over here. I think that if I try and think about it too much, it affects my decision making. Whereas if I just simplify everything, because I only found profitability when I stripped out all the fat and tried to make it as simple as possible and not complex. So when I have all these outside things going on, whether I'm managing multiple accounts, whether they're different sizes or not, I try and just break it down as simply as possible. I want to risk 1, so my R value is 1, and I want to make 2 or 3 on every single trade, right? Regardless of the market I'm trading, regardless of the time frame I'm trading, regardless of the asset I'm trading, or regardless of the type of account that I'm trading, right? If I'm risking 1, it doesn't matter if it's $1,000 account. It doesn't matter if it's $1 million account. I'm trying to protect my downside.
I remember actually, quite early on, you were one of the few traders who would have a trade copy across all their accounts, while others would sort of trade accounts separately. Is that still what you're doing, as you mentioned here, like in terms of your personal Chicago, Alpha Prime, any prop accounts? Like, you still just having them all on a copier?
Yeah. Well, it's not a copier, but I am manually entering all of them because copiers are having an issue. A lot of the platforms aren't integrated.
Yeah.
Like Alpha Prime uses CQG. So CQG, I don't even think has any trade copiers that allow you to have that connection. But yeah, basically I'm trading them all the same. There's benefits and there's disadvantages to that too, because when you take a loss on all the accounts.
Yeah.
Whereas some other people that I know, they like rotating their accounts.
Yes, they do. Yeah.
So if they take a loss in one account, they still feel like they can trade in another account because it's really just a mental game. If you see your one account that's sitting at an even balance and you see the other account that's at a negative balance, how does that affect your performance? Of course, it's probably gonna subconsciously somehow, but I try not to think about it too much.
So to that point, how many of your executions are actually manual in terms of market execution versus
almost all of them? Yeah, manual? I don't really use limits. Yeah,
really. So how do you?
I probably should though. I probably should pick it up and
how do you do that with speeds then across all these different accounts?
It's a nightmare. I have to log in all of them as fast as possible and try and I mean, I can have multiple platforms up, but I can't have multiple CQG connections up.
Yeah.
So I have to log into Alpha Prime, place a position, log out, log into CQG at Chicago, place that position. But again, I'm not like a low time frame trader. So if I miss a fill, it's not like make or breaking my trade idea, right?
Gotcha.
I might lose 0.1 R on the trade because it moves a little bit too fast.
Okay, that makes sense.
Right.
In terms of when you look at traders, do you think a lot are focused? Because I was talking to Tyler about this actually, in terms of loads of traders are really focused on that sort of 1 hour open window, right? 1 hour and a half, maybe 2 hours max, which makes sense. There's benefits to that because you're only hyper focused on one particular time of the day and one section of volatility, right? But we were talking about how, and it kind of goes back to your point of knowing where the market's at as well, how a lot of traders probably are expecting to try and get too much of a move, right? They'll see this volatility, they'll execute, but then their targets are just way outside the window. What probably is realistic, what's probably going to happen, especially to keep it in that time window. And then the problem being, there's some firms that have rules where if it just pulls back, they're out, and that could be the account needing to be reset, etc. Do you think a lot of traders need to start looking at how they're framing and positioning their trades, planning out their trades, and start getting maybe a bit more realistic, even if they're scalping or day trading even, but start getting really hyper focused on those targets. How are they going to manage that trade? What makes sense from, what type of firm or rules are in place? Or even if it's Alpha Prime, for example, how does this, impact this account? And how do I, really adapt so that I'm actually maximizing my time each day that I'm meant to be trading?
Yeah. So it's a realization that maybe you should implement a time stop, because I've had way too many trades, and this is just my data, right? Going back to the beginning of my trading journey, I would recognize that I had let's say if I had a 3R target and it's at 2R, but it's almost lunchtime, right? And I don't take it. I've seen way too many times where if I don't take what's on the table, it'll pull back against me. Maybe I lose 1R, maybe it goes back to break even, or maybe it comes back on me and I get a full stop out. Those are things that I've developed over time where I can just look at the clock and say, this trading session is about to be over. How much more is this market actually going to move? And the same thing can be said if you're a swing trader, if you're trading intraweek, right? Today was a perfect example. How many times historically is there a new high? Let's say if the market's bullish, how many times has Friday printed another new high, right? It's just knowing that there is a time aspect to your trade, because the longer you stay in that trade, the more time exposure you have in the market. And this is all found in your charts. If you go through every single week and you find a week that's been bullish from Monday all the way up until, let's say, Thursday, how many times does Friday continue higher? I would say 70% of the time, it's usually not. 70% of the time, it's pulling back into the range. It's going to at least close the week somewhere in the middle of that range. And the odds, the probabilities that it's going to continue going higher, or create a new high or create a new low on the week, on the last day of the week, is very low. So having that time stop in place, this even applies if you're a position trader and you're trying to trade a quarter, because there are position traders that will build positions, long-term stock positions or options positions, around a 3 or 6 month time period. They're not going to, if they have a time horizon of that trade and they want to be in that trade for 3 to 6 months, you think they're going to try and hold it for 9 to 12 months? Probably not. So a lot of times you have to understand the time frame that you're going to execute in, but you also have to understand the time frame that you're going to manage it in. Right? So if I take a daily trade, I have to assume that I might be in that trade for multiple days. Or if I take an hourly trade, I might only be in that trade for 3 to 4 hours. If I take a 15-minute trade, maybe I'm only in that trade for an hour, 45 minutes. So you have to understand that the execution time frame that you use should also have an effect on your trade management.
Yeah. I think a lot of traders, whenever I sit down with you, but also like other traders as well, who are trying to operate at that higher level, and I want to go back to something you talked about earlier as well, because I think it's important to highlight. But one thing I've noticed is that those traders operating at that higher level are always focused on the finer details. They'll break down something like trade management into different sectors, different steps, different layers to it that need to be focused on and understood, and how it actually all pieces together. So again, it's kind of like taking that, even if you're not a swing trader, for example, but you're still taking that bigger picture approach to everything, not just the markets, but the process, and looking at the different components and different mechanics, the different tweaks and leverages that need to take place in order to overall have a bigger picture, which I think goes back to that point you made earlier, which is it's interesting when you are operating at that sort of level consistently, trying to perform your best, taking risks consistently, especially higher size risks in particular. There's an element of burnout that comes with that. There's an element of almost, not resentment, I don't know if that's the right word, but a reluctance almost to trade consistently all the time at that level.
Mm-hmm.
You see with like Lance Brystein, who's openly talked about how, he hates what trading does to him to operate at that level. Like he does.
He responded to me. He's like, trading is a young person's game.
There you go. Yeah. And it's so true, but it's highly not spoken about because, what's glamorized in this industry is obviously always the P&L, the lifestyle, etc. And that's what we love to do, when we sit down and talk like this, is really showcase the reality, and there's not a single one of the market wizards, professional traders, verified profitable traders that I've spoken to where they haven't really emphasized that level. They still love it. They still have a passion for it, but they don't shy away from the fact that it comes with a lot of weight, baggage, consistent pressure, which is different to a lot of other things. Really, that's why I think so many of those examples are given to like high performance sports, because it's a similar environment in that sense. When you're a professional sportsman, no matter what the sport really is, there's that element of pressure to consistently perform and to handle that pressure most people just aren't used to.
Yeah.
And, what keeps you at this stage, really, you could say walk away from the markets and probably go do other things and be able to be fine, right? What keeps you coming to the market? What keeps you going and handling that pressure consistently, even at this stage?
It really is, to me, the flow state of being a trader. I think trading is so much like flying a plane, right? You have all these instruments in front of you. And like you were saying, you have to have peripheral vision for all these different aspects of trading that nobody really talks about. I think they know about it, but the problem is traders think that they can just tunnel vision on a couple different things. Maybe it's a strategy, maybe it's just risk management, maybe it's trade management. But the reality is you have to have everything. Everything that you have is a toolbox that you use to become a profitable trader. And I don't think if you're lacking in one area, it's really going to affect your performance. Maybe you're not even going to become a profitable trader because you haven't sharpened the skill sets in one aspect of trading. And that's why trading is such a hyper-focused thing, especially if you're trading in the lower time frames. I think even Anthony Crudelli from Ninja Trader was mentioning he's more of a swing trader now because he has more time to think. He doesn't have to be in the markets every single day. And there's not as much commotion going on in your mind and in front of the charts when you're trading those higher time frames. When you're hyper focused, like Lance Brystein, I believe trades like the 2 or 3 minute time frame. You have to be very aware of what's going on around you at all times. Where is my emotional state? Where is my stop loss? Where's my target? How long am I going to be in this trade for? If it's hitting my targets, do I have to trim some of this off? There's so many things that go through your mind as a trader when you're managing a position that not a lot of people talk about because it's all up in here, right? Because you're trading and nobody's really talking about it unless you're trading in a group of people that are consistently talking about these things. But even then, I can't transfer myself into your position, how you're feeling about a trade when that market is ticking up and down. So a lot of times you're just trying to clear the emotional state. And I do that by just taking a long break. Again, like you mentioned, I don't have to trade for the rest of the year. I probably don't even have to trade next year if I don't want to, right? And I'm almost hitting that breaking point where like, I don't really feel like being in front of the charts and I don't feel like trading because again, I feel like I'm losing years of my life when I'm in that hyper-focused zone, right? And it's a hard place to be, but also it feels really good when you're operating at that level. It's just how long can I keep this up before I go through the period where I'm performing terribly?
Yeah. During those hyper-focus moments and runs, what are things that you're focusing on to keep that focus as heightened as possible and as strong as possible to perform at your best?
I think it really is just the flow state, having a really good routine and sticking within those rules that you have for yourself every single day, because trading really should honestly be somewhat effortless. You're showing up, you're following the same processes every single day, and nothing really gets in the way of that. I find where I'm not so focused, I get very distracted by things. Maybe I'm watching a YouTube video, maybe I'm watching a podcast, maybe I'm just on the internet browsing, or maybe I'm focused on my other businesses. Like right now, I'm in the process of purchasing a property, which I feel like is taking my attention away from the markets. And when I have a lot going on just in the real world, I have to kind of take a step back because nobody's really pulling me off of the charts other than my wife. My wife knows that maybe you should take a break. You don't have to be trading every single day. For some reason, significant others usually know better than you do, right? So I think it's important to know where you are from a performance standpoint. Like, am I actually prepped for the playoffs or the championship? And those cycles come every now and then. I don't think you could perform with professional sports, right? During the regular season, every action that they take is culminating. So at the end of the season, they are at peak performance. They don't try and do too much in the beginning, right? Even during preseason, they're not playing the whole game. They're trying to peak their performance at the right time.
Yeah.
And that's the same thing with the markets, is you have to peak your performance at the right time, but know when to slow down and just be in that state of preparation and being prepared rather than foot on the gas, jamming the gas pedal all the time.
And how many, when you are focused on that routine and trying to keep everything in line so that you can perform at your best, how many sacrifices are you actually making in terms of, personal life and social life, etc.? Like, how many of these things do you put on hold?
You basically have to put everything on hold. Like when I'm when I was in the flow state, I didn't really have anything else going on. Maybe I would go out to dinner here and there, but I wasn't pushing forward with my business. I wasn't buying real estate. I didn't have all these other things going on that I needed to tend to. So when your life is in chaos, usually your trading is in chaos as well. You need to be somewhere in the mountains with a Wi-Fi connection, right? In a very calm area. And that's probably a part of the reason why I'm trying to move away from where I live right now, because I think the city lifestyle is great. Like, there are a lot of benefits to being able to walk out of my front door and do a whole bunch of different things. But at the same time, I think if you want to be a peak performer with trading, you're probably better off in isolation, in a very quiet space where you're not being distracted. People aren't constantly hitting you up all the time, and you can really just focus, right?
One thing you mentioned in terms of like real estate, for example, like how has this helped? Or maybe not. You mentioned how it's kind of maybe taking your attention a bit, but is it been helpful to your trading to be able to invest in whether it's real estate? I don't know if you invest in stocks or crypto or whatever it may be, but like being able to diversify income / savings, like how has this impacted your trading?
Yeah, I think it's definitely evolved for sure. To be fortunate enough to be able to diversify. And I've had this discussion with a couple different people. When you have nothing, you should not be diversifying because you have nothing to diversify with. You should be hyper-focused and vigilant in the skill set that's going to pay you the most. So even when my trading was struggling, I wasn't focused on my trading so much. I was focused on my career path, and that allowed me to excel, right? I didn't have the ability to diversify really, but now that my trading has blossomed, I find other businesses and real estate, I find more joy in that and more, I guess, meaning and purpose because it's actually tangible. Like, we're going through a full home renovation right now, and being able to take my profits from the markets, which again is just a number on the computer screen, right? It almost seems fake until you take that money out in the real world and see what you could spend it on, right? I can redo the floors, I can redo the kitchen, I can do all these things with this money that wouldn't be able to be afforded if I hadn't, succeeded in trading, right?
But how important was it for you to focus purely on trading? Were you someone who could do other things like the things we mentioned, like real estate or even like stocks or crypto, for example, heavily when you were sharpening this skill set, building this skill set, compounding the skill set of trading?
I don't think so. I think, again, like I just mentioned, you have to kind of hyper-focus in certain areas. It's, there's a saying in construction, you don't want to be a jack of all trades, a master of none. And it's probably not just in construction, it's just in general. You don't want to be a jack of all trades, master of none. So when you're trying to perfect a skill set, you should be, pouring everything that you can into that one skill set until you master it. And it's just the same thing with all those trading skill sets. If you're terrible at risk management, put all of your effort into that, right? I put poker chips on my desk for a reason because it allows me to hold myself accountable to how many chips I can risk per trade. It took me a very long time. Like, I didn't get it right away. Like, I put the poker chips on my desk. I'd had 3 poker chips that I said, these are my 3 trades for the week. I would have to buy back in 3-4 times because I would take 6-9 trades in a week. And at the end of the week, I didn't learn anything. But the more and more I put my mind towards that, like, I need to focus on this because this is really hurting my trading. That's when I improved. Let's say you're really emotional. You have to focus on that to the best of your ability. Emotions are a funny thing in trading, and they're probably the hardest thing to manage. And I'm not going to say control because you cannot control your emotions. You're going to feel angry when you get stopped out. You're going to feel excited when you have a win. So when I see people on social media, screaming at their screen when they have a win, I'm like, that's probably not the best place to be emotionally because those extreme highs also have an opposing end of the spectrum where you have extreme lows as well.
Yeah. And so as a final touching point, we're coming into Q4 of 2025. Not sure when this goes out, but let's say if it's within this Q4, let's say people are reflecting on the year, and even if they're profitable or not, they feel like they haven't done enough this year, right? They've not really seen progress as they should have done. Reflecting back on your own journey or even this year alone, with, as you said, it's a record year for you. Like, what are things that people should be doing in terms of reflecting on this year to then make 2026 the best possible for them to hopefully have a record year, in their own right, or what that looks like for them? Like, what would you suggest people need to do?
So that's the beauty of the journey, is that you always set these high goals for self. Usually everybody sets high goals for themselves and they sometimes fall short. Sometimes they smash it. But even if you go past the goal, let's say you smash all your goals, there's always, what next? What do I do next? How can I get better? And that's honestly is just the evolution of improving as a human and growing as a human. So having that growth mindset behind you, maybe you didn't hit your goals this year. Maybe you're still a break-even trader, but you should be looking forward to next year. How can I improve? How can I get better? And also look previously, where you started the year. As long as you're making forward progress, it's still progress, no matter which way you cut it. So even if you're not hitting your goals, and even if you're a struggling trader, there are probably things that you're doing better now that you weren't doing previously this year. So you always have to envision yourself, where am I going to be in the future, but also be grateful of how far you've come so far.
Love that. Kyle, thank you for being here with us today. Everyone at home, drop a comment with your biggest takeaway from this particular episode. Obviously, links for Kyle will be in the description below as well. And hey, this has been Alpha Prime Podcast once again. Until next time, everyone, take care.